Welcome back to Explain the Charts, your ultimate guide to mastering market movements. Today, August 3rd, 2025, we're putting XAUUSD, spot gold, under the microscope to uncover its recent performance and future potential. Let's kick things off by examining the current events and news that have been driving gold prices. Google searches reveal a mix of signals, with gold often soaring due to factors like dismal U.S. non-farm payroll data and escalating Russia tensions, which typically spark safe haven demand. We've seen headlines indicating that weak U.S. NFP data has boosted expectations for Federal Reserve rate cuts, a major bullish catalyst for non-yielding gold. Reports also highlighted gold breaking key support levels at times, but quickly rallying, with some news noting a significant 2.37% rally to levels around $3,416 driven by trade and Fed concerns. Interestingly, gold has also been reported as steadied near $3,350 at various points, suggesting periods of consolidation amidst volatility. It's crucial to remember that our latest available market data for XAUUSD concludes on August 1, 2025, reflecting the market's close before the weekend. This means while current news is from August 3rd, our chart analysis will be based on data up to the market close on Friday, August 1st. Now, let's transition to the daily chart to understand the broader context of XAUUSD's price action. Looking at the overall picture since March 2024, we can clearly identify a strong long-term uptrend for gold, characterized by consistent higher highs and higher lows. The price has demonstrated remarkable resilience, establishing a solid base of support around the $2,300 level earlier in its ascent, then building further support around the $2,500 to $2,600 area. A significant milestone was reached in April 2025, where XAUUSD surged to new heights, nearly touching its reported 52-week high of $3,500.13. This aligns perfectly with the news reports of gold soaring on safe haven demand and rate cut hopes. The $3,500 mark now stands as a crucial long-term resistance level. Despite some pullbacks, the overall trend remains robustly bullish, with buyers stepping in at various dips. Let's zoom in on the daily chart, focusing specifically on the period from early April 2025 to our latest data point on August 1, 2025, to analyze the more recent volatility. Here, we can see the powerful rally that took gold from approximately $2,970 towards the $3,499 high in April, forming a significant peak. Following this impressive run, there was a noticeable pullback, indicating profit-taking or a temporary shift in sentiment, consistent with reports of gold breaking key support. However, XAUUSD quickly found new ascending support, specifically bouncing strongly from the $3,200 to $3,250 range in early May, reinforcing its underlying bullish momentum. The current price, sitting at $3,362.09 as of August 1 USD's close, reflects this recovery and consolidation after the initial sharp surge and subsequent correction. This recent price action, including the rally to $3,416 mentioned in the news and subsequent stabilization, demonstrates the market's sensitivity to macroeconomic data and geopolitical events. The ability of gold to recover from dips around these price levels suggests strong buying interest on weakness. This confirms that the news about NFP and Fed concerns directly influence these sharp movements, both up and down. Shifting our view to the 1-hour chart, let's observe the midterm consolidation and more granular price movements from mid-July 2025. In this time frame, XAUUSD has traded within a somewhat tighter range, generally fluctuating between $3,320 and $3,374. We can identify clear intraday support levels forming around $3,320 to $3,330 and immediate resistance around $3,370. The chart shows periods of slight dips followed by quick recoveries, indicating active buying on minor pullbacks. The market has been maintaining its composure, holding above the $3,300 psychological level, which now acts as a significant midterm support. This consolidation phase reflects the market digesting recent news and awaiting fresh catalysts. Traders should note the defined range for potential short-term scalping opportunities with tight stop losses. A breakout or breakdown from this range on higher volume would signal the next directional move. For a more immediate trading perspective, let's drill down to the 15-minute chart, covering the very recent action from July 29th to August 1st, 2025. This chart reveals the intense intraday volatility and the powerful late-day surge that concluded our available data. We can see gold trading sideways for much of July 29th and 30th, hovering around the $3,270 to $3,300 area, confirming the studies near $3,350. News after some fluctuations. However, on August 1st, there was a significant burst of buying activity, propelling the price from approximately $3,280 to the closing high of $3,362.09. This sharp move reinforces the gold rally's narrative from the news, showing strong bullish sentiment entering the market. For short-term traders, the levels of $3,280 to $3,300 now act as immediate support, particularly after Friday's strong close. Resistance will be tested around $3,370 and potentially the $3,400 mark in the upcoming trading sessions. Volume analysis on these smaller timeframes is key. Large green candles with high volume indicate strong buying conviction. Conversely, large red candles with high volume would suggest strong selling pressure. To recap our XAUUSD analysis, the long-term trend is clearly bullish, supported by persistent safe haven demand and dovish Federal Reserve expectations stemming from economic data. The short-term picture shows a recent surge into the weekend close, pushing price firmly above the $3,350 level. For a bullish continuation, we would ideally see gold hold above $3,350 to $3,320 in the coming sessions, reinforcing Friday's momentum. The conditions for this include continued geopolitical uncertainty and further signs of a weakening U.S. economy that could push the Fed towards rate cuts. Our unbiased prediction for a bullish continuation, targeting $3,400 and then the $3,450 resistance, is moderately likely at around 60%. A breakout above $3,400 could pave the way for a retest of the $3,500 all-time high. Conversely, a bearish case or a period of consolidation, holding a likelihood of around 30%, would occur if upcoming U.S. economic data proves stronger than expected, or if there's any de-escalation in global tensions. If gold struggles to clear the $3,370 to $3,400 zone, it could pull back to retest $3,320 or even the stronger support at $3,280. A more significant bearish reversal, estimated at a 10% likelihood, would only occur if key support levels, particularly around $3,200, are decisively broken on high volume. This scenario could be triggered by a sudden hawkish shift from the Fed or a significant flight from safe haven assets. Beyond these technical levels, always keep a close eye on upcoming economic reports, especially inflation data and future NFP figures, as these are primary drivers for gold's price action. Fed commentary and any new developments in international relations will also provide crucial directional clues. Confirming volume with price action is paramount for traders. Strong moves on high volume are typically more reliable. Remember, trading involves risk, and these are potential scenarios based on current information. Thank you for joining Explain the Charts for this detailed XAUUSD analysis. We hope this helps you navigate the gold market with greater confidence. Don't forget to subscribe and hit the bell for more insights into the charts.